Good morning. In the Mumbai News Center, I'm Sonal Bhujra and you're watching Power Breakfast. Those are the top headlines which we will discuss in greater detail. But first up, let's take a look at the Asian markets. Despite a weak handover from the US markets, Asian markets are reversing some of the losses seen yesterday. Most of them are in the green. So gains are led by Nikkei, which is up 0.7%. Shanghai is in the green. However, Taiwanese index and Hang Seng, which were doing really well, up around 0.2%, have slipped further. So the Hang Seng is up just 0.1%, and it has slipped from the highs, and Hang Seng, which was in the green, has slipped into the red and is down 40 odd points. As I said, this is after the sharp sell-off in the US markets with new low for S&P. SGX Nifty, as a result of all of this, is indicating a mild tick in the green, up around 70 odd points, but we'll have to see whether this sustains or not. For now, it's above that 17,000 mark, which was broken yesterday. In the US markets, Wall Street started the week on the back foot with all the major averages closing lower in Monday's trading session. The Dow Jones and the S&P slipped over 1%, while the Nasdaq Composite closed with cuts of 60 points. CNBC's Carl Quintanilla gets us a wrap of all the action on Wall Street.
Here on Wall Street, stocks ended with moderate losses as the U.S. dollar hit a record high against the British pound. A strong dollar can hurt big U.S. companies with operations around the world because their overseas profits translate into fewer dollars when they're brought home. Dow closed down 1%, the S&P 500 ending almost 1% lower, and the Nasdaq finishing with a loss of 0.5%. The Bank of England helped stabilize the pound today with a pledge to raise interest rates if needed to fight inflation. The markets are afraid big tax cuts in the UK will overheat its economy. And 3 men are facing federal fraud charges, accused of artificially inflating the market value of a company to $100 million, even though its only asset was a deli in southern New Jersey. That's the action from the U.S. market. Back to you in Mumbai.
Okay, US markets, they continue to reel under pressure. On that note, let's get in some opinion from Alliance Chief Economic Advisor Mohammad Al-Aryan on global central banks and the rise in US Treasury yields.
This is about governments and central banks being sources of volatility rather than volatility suppressors. So they are adding to the volatility in the markets. That's particularly clear in the UK, but also in the US with the Fed. And it's also about horrible technicals. It's quite a mess in some of these markets. And these are the main markets for the global economy. So it's not a good scene. Hopefully it's going to calm down. But we've also got to make sure that policymakers stop adding to the volatility, because that's what they've been doing recently. We have this relentless increase in yields, this relentless appreciation of the dollar. They are both bad news for corporates. They are bad news for the economy. And until we can break this cycle, and the reason why this last leg up in yields is happening, and the reason why this last leg up in the dollar index is happening, is because we are the safe haven. There are fires burning all over, not just the developing world, but the advanced countries, and we are the safe haven. And one consequence of that is our currency gets stronger, and our yields have to somewhat follow what's happening elsewhere in the world. So that is the tragedy that we're in right now. If we didn't have inflation, if we didn't have a Fed behind the curve, our yields would be coming down. But unfortunately, that's not our reality.
Okay, to the final update from our global market wrap. European markets ended Monday's session mixed with the French CAC 14 points lower, the German DAX slipping over 50 points, and the British FTSE closing flat with the positive bias. The governor of the Bank of England, in a statement, said that they are monitoring market developments very closely after the British pound plunged to its lowest level against the US dollar on Monday. He added the central bank's monetary policy committee will make a full assessment in November and act accordingly. Meanwhile, the ECB President Christine Lagarde told European lawmakers the central bank is likely to raise interest rates further over the next several meetings in an effort to contain inflation. And finally, German economic sentiment in September deteriorated rapidly to its lowest level since May 2020. Okay, so some gloom and doom in the global market. So get in some opinion from former Goldman Sachs chairman Jim O'Neill on the UK policy.
The pound is really cheap. It's fallen a long way, but my God, UK policy seems to be a real mess. And given that it's about 5 weeks off to the next Bank of England rate meeting, in order to salvage the pound's decline, we will have to have, I think, something that's not happened since the bank became independent, which is an intermeeting move to raise rates. We had plenty of intermeeting moves to cut rates, but we've not had one to raise them.
Okay, that's the global market action. Not looking so good as of now, but how will these overnight cues impact our own markets? We have a research team joining in bright and early to tell us just that, the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you first. Looks like another a weak start, or SGX Nifty for now is indicating a positive start.
Well, absolutely right. It seems like a mixed, very choppy trading session ahead of us. But first, let's have a look at, how the global markets panned out. Like you've been mentioning, the U.S. markets were the ones that actually have been quite weak. They continued their weakness and the down trading as far as the fifth continuous trading session was concerned. And in fact, S&P 500 yesterday closed at the lowest level of 2022. In what is even more disappointing is the fact is that the Dow Jones actually ended lower 20% from its recent record high, which technically puts it into bear market territory. And this is something, again, both on a technical as well as a fundamental level, actually is poking quite a bit of fear. Now, when you're talking about the dollar index continues its strength, hit the intraday high of almost the highest level seen since 2002. And this, again, is something that has actually spooked the currency traders. On the other hand, you're talking about the European markets, like you mentioned, ended choppy, mostly lower, but some green across the screen as far as Europe was concerned. But, what was continuing to see quite a bit of decline was the fact that the UK sterling slumped to a fresh record low against the dollar. The Treasury, the US 10-year Treasury yield, hit, a 12-year high yesterday in the trading session. But on the positive side, as far as India is concerned, crude prices continued their decline, and Brent actually fell below the $85 per barrel. Now, when you're coming to the Asian markets, marginally positive start seen in today's trading session. It's quite mixed. But when you're talking about SGX Nifty, a slightly mild positive start seen as far as the Indian markets are concerned. Yesterday's trading session was extremely weak as far as India was concerned. Nifty, in fact, dipped below the crucial 17,000 level before making a marginal recovery. The FII sell figure was very high, over 5,000 crores sold in the session. So it'll be interesting to see how today's trading session pans out.
Oh, yes, it will be. Vivek, thank you so much for all those cues. And now Surbhi is joining us. We'll list out all the stocks that will be in focus today. Hey, Surbhi, good morning.
I have a few stocks on my radar today. The first one is Mahindra Logistics. The company has entered into a business transfer agreement with Rivigo Services Private Limited for its B2B express business. The company will acquire this business for 225 crores. Next is Amara Raja Batteries. The company will merge the plastic component arm of Mangal Industries Limited with itself. This transaction will simplify the business operations by backward integration of supply chain and bringing in plastic molding capabilities in-house. The shareholders of Mangal Industries will receive 65 shares of Amara Raja for every 74 held. The next is Filatex. The company has successfully commissioned debottlenecking of its melt capacity and manufacturing lines at the Dahej plant. Lastly, Hindustan Construction Company completes its debt resolution plan. This will reduce the debt on HCC's books to 3,575 crores and will save on 400 crores on interest payments annually.
All right, Surbhi, thank you so much for talking about all those stocks which will be in focus today. Let's talk about the F&O space now. Nigel is joining us. Hey, Nigel.
Morning, Sonal. Clearly the FI is selling something that's worrying the Indian markets. And the last few days, they've been selling big time. Yesterday was more than 5,000 crores. You need to put into context. Look at the FI selling and the DI buying together. And the last three trading sessions, well, the net institution sell number has been nearly around 1,500 to around 2,000 crores, and that's clearly hurting. On the FI bit, well, they're net sellers for the month of September, as we mentioned. Yesterday as well, it's close to around $1 billion odd. And the last time we saw such a large sell number from the FIs in a single session was in mid-June, the June 17 to be precise, when they sold $1 billion in a single session. So the FI selling clearly is a bit of a rally. What did the FIs do in the F&O market? Well, yesterday, they added some mild long positions and they covered some shorts. I'll be tracking this data very, very closely because they're net short on the markets. Yesterday, the bulls were putting in a fight around that 200 DMA or so. So close to 77% of their positions are on the short side. The problem is the bounces are likely to get sold into. And I'll tell you why. Look at the way they're writing options, call options to be precise. Yesterday as well, there was close to around, three calls that were written for every one put. And that's clearly putting a lot of pressure. And what was active yesterday? 17,200. 17,100 call odd. So a visit towards those levels are likely to be met with some supply pressure. The PCR is getting towards that zone where we normally see a bit of a bounce. It's now below that 0.7 odd. Remember, the lower end of the range is in this vicinity of around 0.6 to around 0.7. And yesterday, the 17,000 put as well was fairly active in trade. So what are the levels you're looking at? The 200 DMA and the 100 DMA, both of them very, very crucial zones. So that 16,700 to around that 16,900 zone, I'll tell you what, the bulls will really be hoping that they can defend that mark. The SGX Nifty is suggesting a big gap up. I think buying on the gap up may not be such a wise thing. But if you're getting an intraday dip and if you're brave enough, like yesterday we saw the bulls putting in a fight at around that 16,990 odd mark, maybe 16,950 to around 17,000, putting in a fight with that risk reward could be favorable only if you're brave. And a couple of stocks that came out of the FNO ban where they should be in focus as well. The list comes up for you on the screen. Back to you guys.
Okay, Nigel, Surbhi and Vivek, thank you so much for joining us and prepping us up for this crucial trading day ahead. Let's spin to a break now. Up next, Finance Minister Nirmala Sitharaman says the rupee is holding out well even as peer currencies collapse. Hi, welcome back. Well, the biggest news yesterday was that the rupee weakened to an all-time low of 81 rupees and 62 paise to the dollar on the sharp depreciation of the currency. Finance Minister Nirmala Sitharaman said the rupee is holding well against the dollar. Speaking exclusively at CNN News 18 town hall, she added that India is much better placed than many other countries whose currencies have plummeted against the US dollar. Listen in.
How Indian rupee, because of the strength of our macroeconomic fundamentals, is holding out well, and the rate at which other currency vis-a-vis dollar has been, rate of fall of other currency vis-a-vis the dollar has been sharply much more than Indian rupee. So is that a consolation? Partly yes, because the strength of your economy speaks when you're talking about your exchange rate. And as a result, we are far better than many other countries whose currencies have fallen pathetically against the US dollar. Now, what is our strategy? The interventions, if at all, which RBI makes using the Indian Reserve, which I think nearly 75 billion has been used, essentially to stop the fluctuations, the severe volatilities. RBI is not aiming at fixing the rate, exchange rate. The government doesn't believe in it. Indian rupee and its exchange rates, the rate is also left to the markets to decide how it's going to float or get fixated at some level. So RBI's intervention is more to avoid the fluctuation. The US Fed's action has an impact on all currencies. So we'll have to only be sure that the fluctuation is not going to be severe. On the one hand, some people do also speak that, a falling rupee also helps. Some people speak, I want that to be clearly understood, that a falling rupee helps in exports. Whether it does or it doesn't, theoretically it may, but in today's condition with the recession outside and demands not really being as adequately as it should be, even a fall in the rupee may or may not help our exports. We are all conscious of these basic facts. We'll have to keep watching.
Okay, that is the view coming on rupee. But Finance Minister Nirmala Sitharaman also said that the government will need to see the losses of oil marketing companies before deciding on cut in prices. Listen in.
I'll have to actually talk to the oil marketing companies to understand where their recovery levels are. Because after all, there were times when they were even importing it at 120, 110, 118. I don't know what kind of losses they've made. I need to work it out with them.
Okay, that is all the commentary coming in from the Finance Minister. But moving on now, the Commerce Ministry has clarified over the delayed new foreign trade policy, stating that the new policy was likely to be rolled out by the 1st of April next year. Abhimanyu gets us the details. Abhimanyu.
The launch of the new foreign trade policy has been delayed by 6 months. The existing foreign trade policy will continue beyond the 1st of October. The government has taken this decision based on various requests and inputs they had received from individuals, industry associations, FIEO and EEPC. Also, the government had held consultations recently, and the new foreign trade policy is likely to come into effect from the 1st of April. The government made it clear that something was needed for the services sector in view of volatility in currency as well as global uncertainty. Also, the government is hoping that the situation will be conducive for new foreign trade policy within the next 6 months. The government has made it clear that the demand is to have a policy with a long-term view, and the government expects to get more clarity with time. The Commerce Ministry also said that there is a need to remain sensitive to the concerns of exporters, and hence the new foreign trade policy, whenever it comes into effect, will of course take into consideration various requests and concerns which have been raised by exporters.
Abhimanyu, thank you so much for joining us with all those details. With that, we'll slip into a break now. Up next, we'll get you all the cues. Hi, welcome back. You're still tuned into Power Breakfast on CNBC-TV18. It's time to talk commodities now. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning.
Hey, morning. And I'm looking at the crude oil prices to begin with, where we have seen some steady moves now coming in. And this is especially because of the hurricane season now hitting the markets there. The latest one is Ian, and it is a category 2 hurricane or storm rather. And the expectations are that it will cross the Gulf of Mexico by the end of this week and make a landing in Florida. And ahead of that, we have seen BP, Chevron, and many other companies cut part production at their offshore oil platforms. And that is what is giving that wee bit of a support to the crude oil prices, which actually have declined by nearly 8% in last 2 trading itself. The declines, though, have continued in case of the metal prices, where zinc and lead fell 3% overnight. Copper is now trading at a 2-month lows. Aluminum is hit an 18-month lows as well. The markets are looking at the strength in US dollar, global recession fears, and a statement from OECD which says that the global growth is slowing down more than it forecasted earlier. So all of those concerns still in the market.
Okay, all right. Weakness in the commodity markets as well. Crude prices are down again. So that's all the word coming in from commodity markets. Moving on, in an unprecedented test of humanity's ability to defend Earth in a doomsday scenario, a NASA spacecraft was made to intentionally crash into an asteroid the size of a football stadium with the goal of seeing if a large asteroid moving towards the planet could be successfully diverted. The mission, known as DART, short for the Double Asteroid Redirection Test, was termed to be a success by scientists who said it would still take 2 months for data to indicate whether the spacecraft succeeded in changing the trajectory of the asteroid or not. Okay, all right. Some interesting stuff happening as far as NASA and that particular segment is concerned. For now, we'll take your leave in this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.